Let me welcome everyone here tonight. I'm Eric Belsky. I'm the Managing Director of the Joint Center for Housing Studies. The Joint Center for Housing Studies is a collaborative venture between two schools of Harvard, the Graduate School of Design and the Harvard Kennedy School. And we're a center that, of course, given the name, studies housing, studies urban issues, and tries to do it in a way that we help inform public debate on housing policy topics and issues, housing planning topics and issues, and we try to inform leaders in the industry to help them make business judgments that will ultimately be successful for themselves as well as for the country. We're here tonight for the 14th annual John T. Dunlop Lecture, and it's really a distinct privilege for me to be able to do this this year as I have in the past years, because we're here really to both hear from an outstanding and towering figure in the housing industry and to celebrate the life of a towering figure in the national life as well as in Harvard's life, and that's John T. Dunlop, who, for those of you who didn't know him, and I was very privileged to get to know John as a friend, was a remarkable individual. He was a leading labor economist, a very famous labor economist, an incredible mediator and negotiator, served as the Secretary of Labor in the Ford administration, served with distinction as the Dean of the Faculty in Arts and Sciences at Harvard University during the 1960s, which you'd have to admit was an interesting time. And in addition to all those things, continued to serve his country by advising presidents, starting with FDR and going all the way through George H.W. Bush. So it was really quite an amazing career that he had, and he made very significant contributions across the country. What I want to do now, before introducing Ron Terwilliger, who will deliver this year's John T. Dunlop Lecture, is to introduce Ann Forsythe, my colleague, who is the chair of the Faculty Advisory Committee of the Joint Center for Housing Studies. She's also a professor of urban planning and is going to welcome you to the Graduate School of Design. So with that, Ann.
Thank you. It's my great pleasure to welcome Ron Terwilliger to the Graduate School of Design. The Dunlop Lecture, for us, is a chance to really highlight the place of housing at the graduate school. Of course, a centerpiece of our housing work is the Joint Center for Housing Studies that, through various incarnations since the 1950s, has conducted important and innovative housing and urban studies research, from Newtown design to housing policy. For the last 25 years, this has included the signature State of the Nation's Housing Report. But the Joint Center does much more than this, with current projects on sustainable housing in Mexico, housing and aging, rental housing and remodeling. Through its Policy Advisory Board, many of whom are sitting here tonight, the Joint Center also convenes key industry leaders playing formative roles in creating and redeveloping the residential landscape. This is a very important role for the Joint Center in the US and the world. But housing is an important interest in many other parts of the design school. It's a popular concentration in urban planning and a key element in many design studios, with faculty, including those involved with the Joint Center but reaching far beyond it. The issue of high-density housing is a particularly important one that intersects with a huge range of other concerns of the Graduate School of Design, from environmental sustainability and urban design quality to transportation and community equity. Given his long engagement with high-density and affordable housing then, I am particularly happy to welcome this year's Dunlop lecturer, Ron Terwilliger, to the GSD, and will hand over to Eric Belsky to formally introduce him.
And before I do introduce Ron, I do want to also call to the podium Bob Mitchell, who's the chairman of the National Housing Conference, the National Housing Endowment. And I'd like to thank Bob for supporting this, as well as the philanthropic work of the National Housing Endowment, which has been doing a lot to advance a number of housing issues, again, across the country. Before I introduce him, and bring him to the podium, I would like to also acknowledge a couple of faculty members, colleagues of mine, who are here. One is Nick Ritsinas, who's the Director Emeritus of the Joint Center for Housing Studies. I believe I saw Rick Pizer also come, and there's Rick, and I think I saw Arthur Siegel. There's Arthur, and if I've missed any of my colleagues, forgive me. And I also want to thank the Policy Advisory Board who's here tonight. Policy Advisory Board is made up of 65 of the nation's leading CEOs and provides support to the Joint Center for Housing Studies and also are supporting this event tonight. With that, let me turn it over to Bob Mitchell, who talked for the National Housing Endowment.
Thank you very much. As Eric said, my name's Bob Mitchell. I'm a builder developer in Maryland and Virginia. I'm current chairman of the National Housing Endowment, and I'm the 2000-year president of the National Association of Home Builders. I'm representing our board of trustees tonight because we're so honored, to be very honest with you, to be involved in this event year after year, and I know that all of them wish me to welcome Ron and welcome all of you. We are pleased that Harvard University and the Joint Center have hosted this event for so long. The endowment has a long-standing relationship with higher education. This lecture honors our great friend, as was mentioned by Eric, John Dunlop, a founding member of the National Housing Endowment. The Joint Center for Housing Studies and the National Housing Endowment founded this lecture series on housing as a way to recognize John's lifelong commitment to the housing industry. We in the housing industry greatly miss him. I'll tell you just a quick thing about the National Housing Endowment. It was formed 26 years ago, and we've taken in about $22 million in donations, and we've issued about $12 million in grants for education, training, and research. More recently, our focus has been on our home building Education Leadership Partnership, which HELP, and it provides to colleges and universities to create or expand residential construction management programs to increase the number of qualified management professionals in our industry. And as we talked, or I heard talked at the meeting this afternoon of the Policy Advisory Board, with labor being an issue right now, the next step up is the mid-management and eventually high management to keep these people working and effectively on the jobs. But tonight, we are honored to have Ron Terwilliger, Chairman Emeritus of Trammel Crow. Mr. Terwilliger served as 22 years as Chief Executive Officer of the Trammel Crow Residential operation from 1986 to 2008. Trammel Crow is a national residential real estate company, and as I think I'm right, is the largest multifamily developer in the United States. Before we begin, I want to thank two people in particular. First, Isaac Heimbinder, who's not here this evening, one of our trustees, who has helped the National Housing Endowment fund this lecture for the past 3 years. And secondly, Bernie Gleiberman, who I think is in the audience. Bernie has since 2011 helped us to sponsor the annual report, the State of the Nation's Housing. So again, on behalf of the trustees of the National Housing Endowment, I extend a warm welcome to the students, to the faculty, and to my fellow folks in the home building industry. And with that, please give a welcome to Ron Terwilliger.
So I do now have the honor and privilege of also introducing Ron, so you'll get to hear from him in just a minute. I do want to note Fred Abernathy, who is a very close friend of John Dunlop's, who's also with us tonight. Fred, thank you for honoring us with your presence. It really is a great honor and privilege to introduce Ron. I've known Ron for many years, and I've benefited from his wise counsel, as have many other people. Ron has a remarkably distinguished career. He currently serves as the chairman for Enterprise Community Partners. He serves as the vice chairman for Enterprise Community Investments. He is the chairman emeritus of Trammel Crow, and as Bob said, had a very distinguished career in business as the CEO, longtime CEO of Trammel Crow. He's also really cares very deeply and passionately about people who have modest means. He created the Terwilliger Center for Workforce Housing at the Urban Land Institute, but has really dedicated a lot of his effort, both his time and his wealth, to helping support housing for people in poverty around the world. He's a former chairman of Habitat for Humanity International. He's the former chairman of the Urban Land Institute. So what you can hear for what I describe is that here's a person who has made really distinguished contribution in business as a business leader. He's played a very strong role as an industry leader in the United States. He's played a very strong role in civil society and in the civic sector in trying to drive towards what he cares most passionately about. And what I think Ron, and he'll speak, I think, from the heart tonight, cares so passionately about is about housing. He really cares about housing because he understands and has seen firsthand just how incredibly vital housing is. And really, unless you satisfy that need and you're able to afford that need, a lot of other things really can't follow for you in life. And he's seen this internationally, he's seen this domestically. And the more he's seen it, I think, the more he's decided this is something he wants to dedicate himself towards trying to improve. There's a saying, it's credited to Martin Luther King, but you'll find other variations on where it came from. But it's that the arc of the moral universe is long, but it bends towards justice. And things don't really just bend on their own. Someone has to bend them. Ron is really one of these people who's been trying to bend that moral arc for a number of years. We're all really pleased to have him here tonight. I think it's fitting, given how important he thinks housing is to every other aspect of your life, and his concern about everyone in society, including those of lower socioeconomic standing, those from very different backgrounds, that he would speak tonight about housing a diverse America. So with that, let me turn it over to Ron.
Thank you very much. Thank you, Eric. It's a great honor to be here tonight to deliver the 14th annual John T. Dunlop Lecture. I believe I'm the first private sector developer to give this lecture, and I know my development career has influenced my thinking. One of the first things I learned as a developer was the developer's creed. The developer's creed states that $1 borrowed is $1 earned. $1 refinanced is $1 saved. $1 repaid is $1 lost forever. We private sector developers worship leverage. In all seriousness, at a time when our society seems so turbulent and politics so divisive, I believe we do ourselves a service by reflecting on those qualities that made Professor Dunlop such an influential figure. John Dunlop was a well-respected academic who lived in the world of ideas, but he was also a public leader who translated these ideas into actionable principles and policies. He was trusted and beloved by members of both political parties, appointed to the cabinet by a Republican president, but called upon by Democratic presidents to solve some of our nation's most difficult problems. A labor economist by training, he recognized the power of decent and affordable housing to transform lives. It is also an honor to be associated with those who have delivered the Dunlop Lecture in past years. I have great respect for people like Bart Harvey, Jonathan Reckford, Jack Kemp, Henry Cisneros, Mel Martinez, and Ken Colton, who have done so much to advance the cause of affordable housing, not only here in the United States, but in other parts of the world. It is a privilege to be in the same company as these fine Americans. Let me also mention how much I admire the work of the Joint Center. The Joint Center does not miss a beat. It consistently produces well-researched, well-written publications that educate and enlighten. The Joint Center is blessed with wonderful leadership. Nick Ratsinas, the director emeritus of the center, is a remarkable individual. Over the years, I have worked with Nick on a number of different boards and in fact succeeded him as chairman of Habitat for Humanity International. His intelligence, common sense, and thoughtful contributions to our deliberations have always impressed me. Eric Belsky, too, is a great asset to this institution. He's not only smart and knowledgeable, he's effective. So thank you, Eric, and many thanks to the entire Joint Center staff. In 1968, when I enrolled at Harvard Business School after 9 years at the Naval Academy, midshipman and then an active duty officer, little did I know that I would spend more than 4 decades of my life in housing. At Harvard Business School, I took the one real estate course offered at that time. Needless to say, I became intrigued with real estate and began to think of it as the industry in which I wanted to pursue my career. My big break in business came in 1979 when I joined Trammel Crow Residential as CEO of Crow Terwilliger Company, an East Coast-focused residential developer. In 1986, I became national CEO for Trammel Crow Residential, and for more than 30 years at Trammel Crow, I worked with a team of incredibly talented men and women to develop residential buildings that have housed hundreds of thousands of families in cities throughout the United States. I'm proud to say that many of the properties we built were called home by some of the most critical members of America's workforce: teachers, nurses, municipal employees, police officers, and firefighters. My remarks this evening will focus on housing challenges and opportunities arising from the demographic trends that are transforming America. I believe these new demographic realities require us to fashion a more balanced federal housing policy, one in which federal resources are targeted to assist those who are most in need of help, both homeowners and renters. While I recognize there are many home builders in the room, I hope that you will not misunderstand my remarks to be anti-home ownership. I am a home builder myself, having built thousands of single and multifamily homes for sale. I have simply come to believe that our federal housing policy today is antiquated and out of step with current realities. Before we dive deeply into the subject, I think it's important to put housing and housing policy into an appropriate context. The great social critic George Orwell once remarked, "Sometimes the first duty of intelligent men is the restatement of the obvious." So let me start by stating the obvious. Food, clothing, and shelter are universally recognized as basic human needs. The essential truth of this statement becomes clearer when you try to imagine what life would be like without a home. Imagine not having a place to rest after a hard day at work. Imagine not having the ability to provide adequate shelter for your children. We also know that a home is the platform from which to engage our neighbors and our communities. It is our entry point to the world itself. If your home is well located, it will provide hope and opportunity for the future with access to jobs, critical services like health care, and a decent education. As I often say, it is unlikely that a family living under a bridge is going to have good health and education outcomes for their children. There is also a deeper, almost spiritual aspect to housing that often goes unmentioned. Our home is a sacred place. It is a place where families grow together, where children retreat and can feel safe. So housing is not just a commodity or an asset class. It is at times a place of shelter and refuge, a platform for engagement with a broader community, a generator of significant social benefits, and an engine of economic opportunity and growth. For those less fortunate among us, hope for a better future often begins with access to a decent, affordable home. This is a universal truth and not unique to the United States. For more than a decade, I've been privileged to serve on the board of Habitat for Humanity International, including serving 2 years as its chairman. I led Habitat for Humanity's $4 billion global capital campaign, A World of Hope, It Starts at Home, whose goal was to assist some of the more than 1.6 billion people worldwide who live in substandard housing. I've seen housing conditions in more than 20 countries in my travels with Habitat. Government support for housing varies dramatically, and where the government is not involved, housing circumstances are frequently abominable. I've come to believe that the only way a country can effectively attack the housing deficit is with sustained governmental support and subsidy. Federal, state, and local governments all need to be engaged. Because housing is so critical for family stability and growth, I believe it deserves the concerted attention of our nation's leaders. Meeting this country's considerable housing needs must not be an afterthought, but a top priority, a matter of urgent and continuous national concern. For most of our country's history, housing has been on the policy back burner. During my adult lifetime, I don't remember political candidates, when running for office, talking about housing, and it rarely makes the platform of our two major parties. It wasn't until the Great Depression, as unemployment, foreclosures, and homelessness spread like a virus throughout the country, that our nation's leaders came to a fuller understanding of the vital role of housing in our society. The result was a flurry of legislative activity. As the Great Depression swept the nation, housing values declined by as much as 50%. Banks were unwilling to refinance the mortgages on these underwater homes. Credit dried up. In response, Congress established the Federal Home Loan Bank System in 1932 to increase the supply of mortgage funds available to local banks and to function as a credit reserve. This was followed up with the creation of the Federal Housing Administration in 1934 to help stabilize the mortgage market through its insurance program. The Federal National Mortgage Association was then chartered in 1937 to create a secondary market for FHA-insured loans. As World War II drew to a close, our nation's leaders shifted their policy focus to housing once again, this time in response to the urgent need to provide housing for our nation's returning war veterans. In 1944, the VA Loan Guarantee Program was enacted as part of the GI Bill. 5 years later, Congress passed the Housing Act of 1949, which authorized production of more than 800,000 housing units. In the Act's preamble, Congress articulated for the first time a clear national housing policy, the realization as soon as feasible of the goal of a decent home and suitable living environment for every American family. It is noteworthy that Congress focused on the home being located in a suitable place, since a home's location is what truly provides hope and opportunity for that family, particularly its children. The 1960s was another era of housing policy innovation, spurred in part by civil unrest in our nation's cities and a greater recognition of the government's responsibility to provide a safety net for our nation's most vulnerable citizens. Our new cabinet agency, the U.S. Department of Housing and Urban Development, was established in 1965. During that period, the FHA experimented with new approaches to help low-income families purchase a home of their own. This commitment to helping the less fortunate found resonance in subsequent decades. In 1974, the Housing and Community Development Act created the Section 8 program, our nation's most important rental assistance program. 12 years later, the Low-Income Housing Tax Credit Program was established as part of the Tax Reform Act of 1986. The point of this whirlwind tour through the history of housing policy is to show that our nation's leaders have had the courage in the past to tackle our nation's housing challenges with conviction and vigor, particularly for the less fortunate in our society. Andy Grove, one of the founders of Intel, often talks about strategic inflection points. According to Grove, these are events, the introduction of a new technology, a shift in customer preference, an alteration of the regulatory environment that force businesses to change the way they think and act. Nothing less than a fundamental change in strategy is required for a business to survive when it confronts one of these inflection points. As I see it, the Great Depression, the return of millions of veterans following the conclusion of World War II, the unrest of the 1960s, were all events that changed the way we thought and acted about housing. They were strategic inflection points that spurred new thinking and new approaches. Today, we find ourselves at another strategic inflection point. Our nation is undergoing a profound demographic transformation. We are becoming older and more racially and ethnically diverse. At the same time, many of our nation's young adults, the 62 million echo boomers born between 1981 and 1995, are beginning to form households for the first time. Annual immigration, which plunged during the Great Recession, is also likely to rise to a level that at least matches its pre-recession average of approximately 1 million new residents per year. These demographic trends will alter the type of homes Americans will choose. They will have enormous implications for housing affordability. And I believe they will require fundamental changes in housing policy to match the new realities in the marketplace. Key demographic developments, now just beginning to unfold, will radically change the housing landscape. They will challenge us to be more creative in fashioning effective responses, and in this way should push us to a higher level of performance in meeting our country's evolving housing needs. But there's no escaping the fact that America's demographic transformation will also force us to make some tough policy choices. In my judgment, it will require a fundamental rethinking of how we allocate limited federal housing resources. Let's take a moment to look at these demographic trends in a bit more detail. The baby boomers are one of the largest demographic cohorts ever in American history. According to the census, the number of Americans aged 65 or older were more than double from 35 million in 2000 to nearly 73 million in 2030. Surveys show that most baby boomers wish to remain in their homes and age in place. In fact, a 2010 AARP survey indicated that nearly 90% of seniors wish to remain in their homes permanently. For many seniors with the physical capacity to stay at home, this makes great financial sense. It is also a boon to our medical system and to society, as the cost of taking care of someone at home is far lower than in a nursing home or assisted living environment. But the desire to age in place runs into a very harsh reality. Our homes were designed and built at a much earlier time, before anyone thought much about the needs of baby boomers once they became senior citizens. So responding to the desire of tens of millions of seniors to age in place will be a huge undertaking. It will require an extensive effort to modify existing homes to enable senior living. In many respects, the echo boomers are the future of the housing market. For the past 6 years, many have been sitting on the sidelines waiting for the economy to improve. This wait-and-see approach, while understandable, has had a very negative effect on household formation. To put this in perspective, from 2000 to 2007, the number of new households formed each year averaged 1.2 million. Yet, as the recession took hold, new household growth declined dramatically, averaging only 500,000 annually from 2007 to 2010. With the economy improving ever so slowly, the echo boomers are wading into the market and forming households. Lacking the resources for home ownership, most are seeking rental housing, often metro areas in multifamily settings. In many markets, vacancy rates are dropping and rents are increasing in response to heightened demand. A recovery in multifamily rental production is now underway, with multifamily developers expecting to start nearly 300,000 new units in 2013. In my view, the demand for rental housing we are now seeing is just the beginning of a longer-term trend, the first few ripples of a much more powerful wave of new, young, and largely minority renters. Adding to the ranks of the renter population are the millions of minority families who have dropped out of home ownership. Many of these families will seek housing in single-family rental homes. A major factor driving the increasing diversity of the U.S. population is the burgeoning Hispanic community. As of 2011, there were nearly 52 million Hispanics in the United States, constituting 16.7% of the population, with this share likely to grow considerably in the coming years. Home ownership rates for African Americans and Hispanics have dropped to pre-bubble levels, well below 50%, and are unlikely to rise anytime soon. Looking ahead, tighter mortgage underwriting standards will constrain home ownership opportunities, but there's a larger factor at work. Minority household wealth is very low. In fact, it is shockingly low. As I read the Joint Center's most recent State of the Nation's Housing Report, these facts jumped out at me. In 2010, median household wealth was just $2,100 for African American renters, $4,500 for Hispanic renters, and $6,000 for white renters. Cash savings account for less than $1,000 of this net worth, leaving all these renters with virtually no cushion against an emergency, let alone funds for a down payment on a home. So these facts lead me to one inescapable conclusion. As the minority share of the population increases, as more and more young people form households and enter the market, so too will the demand increase for affordable rental housing. For many, homeownership will simply be out of reach because it will be prohibitively expensive, particularly as interest rates inevitably rise. Now, don't get me wrong, I strongly support home ownership and appreciate the immense benefits it can offer to families and the larger community. Nor do I believe that a high down payment is the best indicator of someone's suitability to assume a mortgage. We have seen millions of families become responsible homeowners after putting just a small amount down. The key remains proper underwriting as well as counseling to make sure low-wealth homeowners can meet their mortgage obligations. My point here is that years of stagnant incomes, limited job opportunities, and lackluster economic growth have taken their toll. It's hard to see how we can return to the days of a home ownership rate approaching 70%, when so many of our fellow citizens have so little. Incidentally, our home ownership rate today is approaching 64%, which was the average home ownership rate between 1965 and 1995, before the federal government began a push to increase it and before our country's population became so diverse. I believe the new paradigm for home ownership will be closer to 60%, considering the increasing growth of low-wage jobs combined with increasing minority household growth. The most immediate danger we face today is that renting is also becoming prohibitively expensive for too many Americans, particularly for those at the bottom of the income ladder. Renters make an average of $31,000 per household, less than half of homeowners' average income of $64,000 per household. The Section 8 Rental Assistance Program was established in 1974 to supplement what low-income renters could pay for housing. Unfortunately, today, this program serves only 25% of those eligible due to lack of adequate funding. In many communities, there are long waiting lists to obtain a Section 8 voucher, and in some areas, vouchers are allocated by lottery. With rental demand increasing, more and more lower-income renters are spending unsustainable amounts of their incomes on housing. HUD tells us that worst-case housing needs for renters are at their highest levels ever. More than 25% of unassisted rental families spend 50% or more of their income just on housing. And more than 50% of renter households spend more than 30% of their income on housing. Today, incidentally, there are more than 9 million homeowners who also spend more than 50% of their income on housing. One of the biggest challenges today is the shortage of rental homes affordable to those families with low incomes. According to HUD, there are only 65 affordable and available units for every 100 very low-income renters. For extremely low-income renters, those making less than 30% of the area median income, the scarcity problem is even worse. There are only 36 available in affordable rental homes for every 100 of these households. In the past, national policymakers departed from the prevailing orthodoxies when America's housing needs and economic circumstances were changing, and action was necessary in the face of these strategic inflection points. Today, we must show similar flexibility and vision. In my view, the 1949 Act's call for a decent home and suitable living environment for every American family should be at the core of our national policy. It was important then, and it remains important today. But in light of the dramatic demographic changes that are now taking place, achieving this goal will require a far more balanced approach to the way we allocate limited federal housing resources. To put it simply, we should focus less on subsidizing higher-income homeowners and more on helping lower-income renters as well as low-wealth homeowners. Today, the federal government spends approximately $200 billion annually to support housing through a combination of tax expenditures and direct appropriations. About 3/4 of this spending is devoted to supporting home ownership, despite the fact that homeowners have more than twice the income of renters on average. This makes no sense, in my opinion. I recently had the privilege of serving as a member of the Bipartisan Policy Center's Housing Commission. We adopted 5 principles at the outset to guide our work. Included in these principles was an affirmation of the goals of the 1949 Housing Act. Additionally, that the primary focus of federal housing policy should be to help those most in need. And finally, that federal housing policy should strike an appropriate balance between home ownership and rental subsidies. Of course, the biggest federal subsidy for housing is the mortgage interest deduction, with a projected cost of between $70 billion and $100 billion annually. Under current law, interest on mortgage debt up to $1 million is deductible, So too is the interest on home equity lines of credit up to $100,000. Interest on mortgages for second homes is also deductible, as are real estate taxes. Profit on the sale of primary residence is also exempt from taxes up to $500,000. There's been plenty written about how the mortgage interest deduction disproportionately benefits the wealthiest of Americans. According to a recent study by the Center on Budget Policy and Priority, 77% of the benefits from the deduction go to homeowners with incomes above $100,000, while 35% go to homeowners with incomes above $200,000. Virtually none of these households have severe housing cost burdens, and most could undoubtedly purchase a home without deducting their mortgage interest. Today, only 30% of taxpayers claim the mortgage interest deduction, mostly higher income individuals with larger mortgages. Close to half of homeowners with mortgages, most of them middle and lower income families, receive no benefit from the deduction, often because they do not itemize on their tax return. It's sometimes said that changing the mortgage interest deduction will negatively affect the home ownership rate, but many first world countries without mortgage interest deductibility, like Canada and Australia, have higher home ownership rates than we do. In fact, the United Kingdom phased out its own mortgage interest deduction, and the share of households owning homes in the UK rose from 53% to 68% during the phase-out period. A recent survey of home ownership rates in 42 countries found the U.S. ranks 34th in home ownership, despite our considerable subsidies. Of course, I wish our federal government had more resources to support housing in all its forms, so that making tough trade-offs would not be necessary. But I recognize we not only have a rental affordability crisis in this country, we have a fiscal crisis too. Resources are tight. So what's in the federal budget for housing must be spent more wisely and effectively, targeted to those most in need. For me, the path forward is clear. We should reform our approach to subsidizing home ownership, directing the home ownership subsidy we can afford to those who truly need help in purchasing and sustaining a home suitable for their family. I believe we should provide down payment assistance as well as subsidized interest rates for first-time low-wealth home buyers. We should then put the significant savings that result to work supporting the production of hundreds of thousands of new affordable rental homes and substantially increasing the demand-side support for renters who have housing cost burdens. This should be done gradually, over time, by phasing in changes so as to limit disruption to the housing markets. As we move in this direction, it's important to recognize that many of today's renters will be tomorrow's homeowners. Creating new, more affordable opportunities for renter households will allow them to establish good credit histories and create more stable living environments that should promote both work and education, and for many, ultimately, home ownership. As an immediate response to our considerable need for more affordable rental housing, Congress must preserve and expand the low-income housing tax credit program. As someone who has been in the multifamily business for more than 3 decades, let me tell you, the housing credit works. Without question, it's been our nation's most effective tool in supporting the production of rental housing for low and moderate income families. One of the best features of the housing credit is that it engages private market forces while minimizing risk to the federal government and the taxpayers. It is a true public-private partnership. The facts speak for themselves. More than 2.6 million affordable rental homes built or preserved since 1986. More than $100 billion in private investment equity harnessed. Hundreds of thousands of jobs and billions of dollars in tax revenue generated by the housing credit's multiplier effects. Congress is just beginning to consider tax reform, and there's been some discussion that the housing credit might be eliminated. That would be a colossal mistake. On the contrary, federal funding for these housing credits should be expanded to the greatest extent tax credit investors will allow. The cost to the federal government today represents just 3% of the current subsidies for housing, so there's plenty of room for growth. With this increased funding, I believe the program should be made more flexible to allow the housing credit to finance mixed income developments affordable to workforce families and incomes up to 120% of the area median. This approach is particularly appropriate for projects in our country's high-cost metro regions. So to summarize, at a time of severe fiscal constraints, we should target federal housing subsidies to those who need help the most. Consistent with this goal, we can reallocate the existing federal subsidy for home ownership to satisfactorily address both the demand and supply side needs for affordable rental housing while supporting an expansion of home ownership opportunities to those who truly need assistance. I consider myself one of the luckiest people on the planet. I was born in the United States in the middle of the last century, a time of immense promise as the United States emerged on the world stage as a global power. I was raised by a hardworking family in Arlington, Virginia, making my way through the public school system and able to afford college only because of an athletic scholarship. My father earned a very modest income, was able to provide a comfortable 900-square-foot house, typical of the time where my brother and I were raised. I believe I have lived the American dream, achieving upward mobility in our capitalistic democratic society through hard work and a fair amount of good luck. But after decades of experience in both the for-profit and not-for-profit sectors of our nation's housing economy, I am convinced the most significant impediment to achieving the American dream for many low-income families is the lack of suitably located, affordable housing. While the United States may be the most powerful nation in the world, we are far from the best housed. Today, fewer and fewer families can afford a home in a decent neighborhood, connected to good schools, transportation, health care, shops, and services. Although we are one of the most philanthropic countries in the world, very little philanthropy is directed towards housing, leaving up to government to help achieve the goals of the 1949 Housing Act. Today, as we work to meet these goals, the federal government spends a significant sum annually on housing subsidies. But in my judgment, these investments are grossly mistargeted and fall far short of serving those low-income renters and would-be homeowners who need help the most. So in my view, it's time to rethink our federal housing policy and the subsidies that support it. As America's demographic makeup changes, as demand for rental housing increases, we need to muster the political courage to ensure we are spending our limited federal resources more wisely and effectively. So how should this great country measure the success of its housing policies? Rather than celebrate the highest possible home ownership rate, I believe we should measure the effectiveness of our housing policies by how many families remain with housing cost burdens that make it difficult for them to afford other necessities of life. The potential upsides of a new, more balanced and targeted approach are great. By directing subsidies to those who truly need help, I am confident we can significantly reduce the number of homeless in America and provide more stable, affordable housing situations for millions of low-income families. This, in turn, will improve education and health care outcomes for these families, potentially enhance the job prospects for those who work in these households, give them an even stronger sense of attachment to our society, and provide a platform to renters for one day entering the home ownership ranks. Ultimately, a society that calls itself fair and just must ensure that all of its citizens have access to decent, affordable housing. Today, we are far from achieving this goal, but is one we must continue to pursue with renewed vigor and determination. Thank you for your attention.
Thank you, Ron. Ron spent a great deal of time thinking about the message he wanted to deliver here tonight, has been involved, as he said, with the Bipartisan Policy Center Housing Commission, which did a very thorough review of housing policies in the United States. And this is the conclusions that Ron has drawn about where he thinks the nation needs to go, especially if it's serious about wanting to address low-income housing needs in the United States. Ron's agreed to take questions, and as is our custom, we'd like to see if there are any students who'd like to start off the questioning. Do I see a student?
They weren't so shy earlier.
Yeah.
My name is Ben Schaefer. I'm a first-year MPA at Harvard Kennedy School. Thank you very much for your remarks. It's apt, it seems, that you're talking about federal policy a couple hours before the federal government's about to shut down. So my question is, absent any kind of federal action, I guess, in the near term, are there things you think states or municipalities should be doing to help advance this vision?
Yeah, thank you for the question. And let me be sure, my fellow BPC commissioners that are here, I wasn't representing the BPC conclusions. You all can read those. These are my personal feelings about housing policy, not bipartisan policy centers. I was asked this today. I met with a group of students earlier, and I did intentionally include, if you all caught it, a comment about state and local. We suffer in this country in many ways about an inability to get affordable housing in the right locations. NIMBYism is rampant. People have a really hard time getting density approved. Unfortunately, state and local governments are probably more strapped for funding than they may have ever been. I think they can do something about it. I was commenting today, if a mayor wants housing to come into a city, he or she should let the development community know. They should make sure that there's an office within the housing group that tries to expedite and encourage. There are incentives such as real estate tax abatements that you can provide. The low-income housing tax credit normally comes through the State Housing Finance Agency, so they can help direct them. The thing that's really been unfortunate about our policies, one of the things is that the housing is not located, and I tried to make in my talk a real point, and we emphasize this at Enterprise a lot. It's important that families have an affordable house, that kids have a place to come back to and study and feel safe and engage. But where the house is located is really important too, because if it's not in a decent school district, if it doesn't provide a way for somebody to get to work, if it's not near services, if it's not a safe neighborhood, that's a real problem. States and local jurisdictions can really help with that if they're proactive about it. I just find that it seems somehow, for whatever reason, politicians don't want to talk about housing. Home rule and zoning decisions are local, and so there's just rarely strong leadership at the state and local level on these issues. And it's going to get worse. The demographics, and that's why I chose this topic, the demographics are compelling. You look at it, 70% of household growth is minority. Homeownership rate last time I saw was 43%. Jobs that are being created are really low-wage jobs, those that aren't high-wage jobs. We're skewing the median income in this country now, $51,000, but renters, $31,000. Let's just think about average renter, $31,000. How do you make ends meet on $31,000 a year? I hope that was somewhat responsive.
Thanks. I really welcome where I think you're going with your comments. But I want to ask about one piece of it that is interesting to me. It's campaign season here in Cambridge, and there's a big debate about housing, where some people are arguing for more what they're calling middle-income housing, as opposed to low and moderate income, and without going into the details, the distinction between moderate and middle. But you summed it up, I think, when you said up to 120% of area median income. Here's the question, though. If the subsidies should be targeted to those who truly need it, how do you reconcile that with subsidies for people who are making 120% of area median income in a place like Cambridge puts you over $100,000 a year? So, I'm not criticizing it, but I'm wondering if you could elaborate on your thinking about that.
Yeah. Well, those of us who are in this affordable housing arena, one thing early on I concluded, and I chaired a task force for the mayor of Atlanta, and we called it affordable workforce housing, so everybody would know these are working people. When I created the housing center at ULI with Pam Patnode working with me, we focused on workforce households, which we defined as 60 to 120% of area median income. These were people who could not afford a decent rental apartment, much less home ownership, within reasonable proximity to where they worked. And we did studies in Boston, we did studies in San Francisco, we did studies in Washington, D.C. to show that that was a real burden. Now, if you got limited resources, where do you direct them? The BPC said we should direct them all to people making less than 30% of area median income, the people with severe cost burdens. It's hard to pick and choose. Obviously, those people are in more distress. if you advocate, as I do, for mixed income housing, where you don't isolate the poor and leave them in areas with poor schools that are unsafe and don't have hope and opportunity for the future, but you focus on mixed income, just as my comments about the tax credit are. I'd like to see those really lower income people get the help they need, but be integrated into, you know, the workforce housing, so that people have a chance to grow up in a decent neighborhood and go to a decent school and get lifted up, as I did growing up. Is there a question in the back?
Hi. Is this on? It looks like it's on. Can you hear me?
I can, yeah.
Wonderful. You addressed this a little bit. You talked about, you know, the sort of $200 billion of sort of subsidy that we need to sort of reallocate. I think more funds for the low-income housing tax credit is excellent. But I'd be interested to hear some other ideas about where some of that money can more intelligently be allocated, you know, whether it be for more Section 8 vouchers, heaven forbid, some more construction of actual public housing.
Yeah.
Doubtful, but
Yeah, well, you know, I could have been really, really specific, but the general message that I tried to give was we're spending currently about $200 billion. 75% of it goes to home ownership, 25% of it goes to rental. Renters make $31,000. They're now 40% of our population. Homeowners make, you know, or if you include people that are in homes they're not paying their mortgage on. And so I think what we should do is the concept in business of zero-based budgeting. First off, I presume we can't afford more than $200 billion. Maybe we should spend a little bit less than that. But if then you go back to it and you follow the principles of the Bipartisan Policy Center, that you should have balance in housing policy between home ownership and rental, and that federal housing subsidies should go to those most in need. What I would do is take the $6 billion, which is the federal burden for the low-income housing tax credit, 3% of the $200 billion, and double it to the extent tax credit investors. That would get us producing probably 150 affordable rental housing units a year and preserving another 50 or 60. I would love to see them do that. I'm petrified that they may just do away with it altogether, and so I've been lobbying Congress personally to try to talk to Congress people about, you know, what the current housing situation in this country is. I think that low-wealth homeowners are going to have a real hard time getting mortgages these days. I'm sure they are right now. And I've seen in other countries, Panama, for example, where the interest rate is subsidized depending on how expensive your house is. That's just one example. So I think, as I said in my talk, we should provide down payment assistance and we should provide interest rate subsidies to low-wealth families who are stable and want to buy a home and have the income. You know, it was a real underwriting crisis that we had, you know, along with all the other shenanigans that went on. Plus, counseling is an important thing. So I would use the money to expand the production of new affordable rental housing and then to provide subsidies for people who really need help. You can figure out where to draw that line. Some communities, people at 120% can't afford to live close to home. Other places that are less costly, it's much lower, 80%. But more rental housing, more support for individuals who are in rental housing, and supporting low wealth, potential first-time home buyers. That's where I think the money should be going. And I think we've got enough. It's not targeted properly.
So how would you factor Hi. Hello? Okay. Hi. My name is Matthew Singh. I'm a recent urban planning graduate. And I was just wondering what your thoughts are on how student loan debt factors into home ownership or rental.
I think the home builder should pay off your student loans. Is that? Stuart Miller told me he was going to do that. You know, all I would say is that it's an impediment to echo boomers buying homes, I think. I mean, I think that's one of the things that's going to basically slow down. I heard at the Joint Center program today that lagging behind was first-time home buyers, if I understood it correctly. That's a new dilemma, I think, for young people who coming out of school with a lot of student housing debt is that's going to be an impediment to them getting into home ownership early on. And I think, there's lots written about it, and I am involved with some education nonprofits, but I think, people just need to be really thoughtful about how much debt they take on, because it's presumably going to be with them for a long time. But that's tough, I think.
Let me have the prerogative of the last question, and then we'll call it an evening and thank Ron for his interesting remarks and his care and thought in putting them together. The question was asked about the state and local government role, and of course you focused on federal policy and the allocation of the funds that we have, or something that looks like that pie. But having been a private developer and struggled against a lot of regulations that add to costs of housing, that constrict the supply in exactly the kinds of well-located areas you'd like to see more housing because it is well-located, but the densities are so low. What's your thoughts on the scope of the federal government doing more to try to incent, if nothing else, local governments to try to build at higher densities? As you know, one of the former lecturers here, Jack Kemp, had a commission that looked at exactly those issues when he was the HUD secretary. And just your thoughts as again, someone who's really tried to develop things at higher densities, as to the challenges of doing that and the potential scope for a federal role there.
Yeah, so I was telling some people earlier, I wish we had a do-over, because I think we had a real shot at the end of World War II to develop this country in a rational, smart growth way, and we missed it. We built highways and built a dependency on the automobile, and we're still trying to dig out from under that. I think, unfortunately, Eric, I don't know that the federal government can do that. I mean, I think enlightened state government and local government could do it. Some states, have laws that relate to affordable housing, and I'm not even sure how effective. I think Massachusetts has one, New Jersey has one, in the West Coast. Inclusionary zoning is something that I have been an advocate of. My fellow for-profit developers think I'm nuts. We tried in Atlanta to have inclusionary zoning. The state constitution prohibited it. So we then tried to have voluntary inclusionary zoning, trying to get some mixed income housing. But the impediment, as I commented, is local zoning. Basically, the council person in an area generally is discouraged from approving anything that has density, and so people who are likely to be inclined in living in higher density are just pushed farther and further away. And I don't know. I mean, I think we missed our shot back in 1950, and I'm not sure, given how sacred, it's kind of like the Second Amendment gun rights. I don't know how sacred home zoning is. It's local, and I just don't know how you take it away from us. So I'd rather work through ULI's, district councils, and other organizations to try to convince the local governments and the state governments that it's in their best interest to facilitate affordable and workforce housing in a mixed income environment, and not, I think the feds is a real long shot.
Okay, please join me in thanking Ron. And thank you for joining us this evening.